Hey everyone, Scott Cunningham, aka Scottsy Business here. Today we're going to be taking another look at my dividend portfolio and how it's performed over the past little while. We're going to look at the stocks that I just recently acquired. I actually met my goal because I started including my crypto investments. So we're going to take a quick look at that, but I will save the bulk of the explanation for a separate video on how I earn dividends through crypto, but I will include that in my overall look at my earnings and the general breakdown. So start off just by sharing my screen, and before we go into my Excel sheet and my tracking information, we'll go and look at what the bank thinks, and or rather what the bank knows, not thinks. So I was up 8% for a little bit, but the market has since gone back down a little bit. So we're right around being even, which is still a really good place to be in right now, given everything that's going on. I'm not concerned at all. If stocks go down, buy more. If stocks go up, I'll continue buying, but very leniently, because people have been talking, there could be another crash. There could be another crash. And while that's generally always what people are saying, we're in extraordinary circumstances, so I'm going to keep some money set aside in case we see another drastic drop, so I can put a lot more into the market. But I am very happy to say that we're basically even, and I'm getting close to a $10,000 portfolio, so we'll be into the next milestone, so to speak. And if I could get this to 20,000 by the end of the year, I would be ecstatic. My goal for this year was to get my investing portfolio up to paying me $75 a month on average. And and while I've gone it up to $53.75 with fiat currency, now that I've begun to include cryptocurrency, you can see that I'm earning about $335.60 worth of cryptocurrency every year. I essentially took about, I would say about a little over $2,000 worth of my cryptocurrency, and I consolidated it into different crypto paying dividends, cryptocurrencies that I could stake in, and cryptocurrencies that essentially were payment or fee sharing for different exchanges like REI.UN, for example. And I also tried out BTMX, but I wasn't a huge fan of the way that it worked, so I just cashed that out and put that into ReI.UN as well. But again, I will do a full breakdown of all of these in another video. I also wanted to dabble in cryptocurrency real estate. So essentially what this is they've taken a property and they've tokenized it. They've created 4,000 tokens, and each token represents a part share of the property as well as the profits and the rent. So they're saying on average you should be getting 11.82% every year, which is very, very good. And that equates to $17.21 a year. And in Canadian, that ends up being $23.98 at the last time I checked the Canadian dollar difference from the US dollar. $23.98 is actually really good. That boils down to about 7 cents per day. That's pretty impressive. And that's what I've been getting. So while this is kind of like, it's hard to be super confident in these types of things because it's not very liquid, right? If I wanted to sell my property, it would be very challenging. So, this isn't the safest bet, but I definitely wanted to test out, put a little bit of money into a bunch of different crypto dividend paying tokens and cryptocurrencies to really test out what is all out there. You can also do lending, but when I compare lending to a lot of these staking coins, I've found that the risk for lending doesn't really outweigh what you can get otherwise. But again, I don't want to spend too much time talking about crypto because that's not the main focus here. So I will do another video for that if you guys are curious. Anyways, though, well, I'll briefly show you the token here just so that you guys know it's a legit thing. This is the token. It's actually the full name as you saw before, but I just shortened it to this. And they pay out 7 cents of USDC token, which is the US dollar coin. And as you can see, I've got about 0.235 of it. That's 34 cents Canadian. So yeah, it's really, really awesome. They're paying this out every day, and I see it coming in every day, and I can double check that everything's good. So right now they're paying out everything in the correct amount, and everything looks really great. I will let you guys know if I see changes in what they're actually paying out, and I will continue to track all of that so that you guys can see how reliable it is as well from a investor perspective. Now for the main focus, which is the actual dividend portfolio here, my estimate is very, very close to what the bank says. So that's really good to see. That means I don't really have to change anything. I remember at some point seeing Joseph Carlson talk about email notifications for dividend changes, but I swear to you, I spent so many hours trying to find the same thing and going through a bunch of his videos just looking for him mentioning this. I could not find it for the life of me. So if you know of any free dividend tracking, whether it's like an app or it's via email or notifications or whatever it might be, or even if you know one that is cheap, I would be willing to pay for this because it's very, very important for tracking that I know the exact dividend of each of the stocks. And essentially all I want is I can enter the ticker symbol and just get a notification if they do some change to their dividend. Pretty simple. In the video that I watched before, you were able to do it for free with whatever Joseph Carlson shared, but I could not find it for the life of me. Or for all I know, it could just be for US stocks. This is almost all Canadian. So if you know of something, I would really appreciate it. And you know what? To incentivize people, I will give out a small amount of Ethereum to whoever gives me a good solution. Ideally free. If it's paid, probably won't get as much because I'll be paying for it. But yeah, if you guys know of something like that, please let me know. It'll benefit me. It'll benefit anyone watching to find something similar. And then I will show people how to do that as well in the next video. But as you can see, my annual dividends is 640. And this is an annual gain of 7.39%, which is pretty average. They usually say between 6 and 8 is pretty normal. So it's good to be on the average side, right? If you've just got stocks that are 17%, like that's really sketchy. A lot of people would say even over 5 or 6 is getting a little risky because they might be increasing their dividend as the actual stock declines. So it's something really important to watch for. But for me, I'm not too skeptical of REITs and real estate that pays out more because typically they do pay out a higher ratio. So that's not as skeptical or like something to be skeptical of. But definitely, be cautious and don't be super trusting of a dividend that looks too good to be true, right? Because usually they aren't. For example, American Hotel Properties REIT was paying out, I think the dividend was something like 20%. It was just a ridiculous amount. And then they cut it like by a ton. I ended up selling 100 of my stocks here because it went up by such a huge amount that I was able to get a huge gain off of that and then just put that back into, I think it was Canadian Western Bank. Yes, right here. So here I've got the actual dates listed of when I purchased, and you can see over the past 2 weeks, these are the stocks that I bought. So in the first round of buys, I got Alaris Royalty Corporation. Some people might think this is a bit risky, but I did want to dabble in a few different finance investing stocks. Let me know if you are invested in this and what your thoughts are though. Banking is always safe. I invested in Canadian Western Bank because it's still got a really good price opportunity. It's 40% down still, so there's still a lot of potential there. Great West Lifeco, which is finance, another good finance investing. I'm trying to balance out my portfolio so that all of these values are to what I have set for my goals. And even though some of these might be higher than I want, it'll balance out over time as I continue to increase my holdings of these other small ones that I haven't really dabbled in yet. The main thing I'm focused on during the crisis is price opportunity. Once this is all over, I will diversify a lot better, and I will also buy the safe backup stocks like grocery and stuff like that, stuff that wasn't really heavily affected, so that if there was a resurgence or some issue to happen again, those stocks will be my sort of defensive stocks. So I'm not really going to be investing in that until after a lot of this is cleared up and a lot of prices have returned to normal, so to speak. I won't be surprised if grocery stocks are up when everything else is returned to just normal, but that's fine. I don't think they'll be up higher than the amount of how down these stocks are. So in terms of how much of a gain you could get and what the opportunity is, I think this is more important to focus on for now and then deal with the defensive stocks later. So the other stocks that I purchased were, I wanted to get some Manulife stock, but I ended up not investing in that. That'll be the next thing I'm going to invest in. I think it's important to have an idea of when money is coming in and know exactly what you want to be spending your money on. And then essentially I'll wake up at 9:30 when the stock market's open. I'll pull open my portfolio and I'll take a look. Has there been a little bit of a gain, a little bit of a loss at the beginning of the market? And then I'll kind of make a decision based on that. Generally, I don't worry about it too much because we're not trying to day trade. We're trying to get these price opportunities where they are and then hold them long term and just increase my overall income. So we also got this real estate ETF. ETFs are really, really good for real estate if you don't want to look into the individual properties and exactly what they are buying. ETFs just make it very, very easy. Though I will say that the majority of millennials are just investing in ETFs. And I think it's unwise to only be investing in ETFs because they're kind of saturating that, I think. And who knows? We'll see what the repercussions are in the next year or so. But I mean, if you have no idea, ETFs are probably a safe bet. But I do recommend looking into the actual holdings and having a general idea of what the ETF's goal is and what their objective, or either or objective goal, what they're trying to do with the portfolio. So you can actually see just by the name generally what they're trying to do. So it's a Canadian capped REIT, and they've just got a bunch of different real estate stocks that they're investing in, which is more or less a lot of the REITs that we already have. This is just an easier way to invest in them. One good thing about a lot of ETFs is it allows you to invest in expensive stocks without having to put a ton of money in. So say the ETF is $20, but it's investing in a stock that costs $1,000. This allows you to own, in a way, it's like owning fractional shares, because there are a lot of places where you can do this, but I haven't seen anywhere in Canada that you can buy fractional shares. So ETFs are sort of like that hack to be able to sort of hold a part owning of a stock and get part of the profits from it, because you're getting the average of all of their yields together, which makes it a lot more diversified and safer for the most part. Again, none of this is financial advice, right? I also invested in 2 general investing ETFs. I mean, they do generally have some focus, but for the most part, they're pretty spread out. So a lot of the ETFs that I invested in, like these 3 here, they're just very well spread out. I think one of the biggest things that I've been looking for in ETFs are Canadian ETFs that invest in US stocks. The reason being that if I earn US dividends, and the reason why I have no US stocks whatsoever, this is mainly for Canadian investors. Canadian investors receive a tax benefit for their dividends. And if you're making a certain bracket of income, you can actually get your dividends completely untaxed, which is where I'm at currently because I make a lot of cryptocurrency. The good thing here is then you don't have to get taxed on it, right? If I earn dividends in a higher tax bracket, they're still going to be cheaper. But if you earn them from the United States, it's just taxed as capital gains, I believe. I'm not sure though. You have to double check. It might just be your overall income. It might just be your overall income. But I know for a fact that because of how wide the gaps are, like for example, you could be making $100,000 and still receive some sort of tax benefit. But if you're like at 150, I think it's somewhere around there, is when you'll actually start to basically make the same amount from dividends as you would otherwise. You guys can fact check me on that and post in the comments below, because I'm not exactly sure on where the margins of that or the exact points in which the tax bracket changes. But that's definitely something to consider if you're a Canadian investor versus a US investor. Canadians should mainly be focused on Canadian stocks, or what I'm doing is focusing on Canadian ETFs that invest in international stocks and US stocks. So that way you can still be a part of those markets and get the full tax benefit as a Canadian investor. I'm sure the majority of people watching are not Canadian investors, so this won't be super relevant, but definitely look into your country's dividend benefits. And if you have any kind of tax benefits, then that might apply to you as well. The last two stocks that I acquired on the first are Telus and Waterloo Brewing, which is a alcohol brewing company. This is the first alcohol company I've acquired. I'm actually from Waterloo, and that company is really, really great. And it had a huge price opportunity. When I bought it, it was about like 40% down, I think. So, and because it was so cheap, it was only like a few bucks. I bought 75. So I'm pretty excited about this one. I think there's a lot of potential, even though it's still down. It's just basically the booking cost. I see this going up a lot in the future. And then I also bought Telus. I like Telus because even though it's not as like widely used for like internet and like cable and stuff, I think the future is going to be a lot more focused on mobile. A lot of people are cutting their home phone, their landline, if they still have them. I'd be surprised. I'm sure some older people still do. A lot of people are cutting out their cable because they're already paying for Netflix and other solutions. So it's making it very, very challenging for like Rogers and Bell to keep up. Luckily, they have a monopoly on internet, so I'm sure they're going to hold this for a very long time. But for all we know, at some point, Elon Musk is just going to launch like thousands of satellites, and everyone's going to get free Wi-Fi all around the world. Then the only thing that you might not even need telecommunications at that point. So I'm hesitant to be heavily invested in telecommunications because I think they might be just completely replaced by some awesome new tech in the next 10 years. But that's obviously like a pipe dream, and there's no really relying on that. That's just the way that I'm going to go about it. And I'm mainly just looking at investing in, like, I still think telecommunications is important, but I'm just really trying to invest in the cellular side, not as much on the home services and utilities. So let me know what you guys think about that. What stocks are you investing in? What is your portfolio looking like? How are you trying to diversify? What are you mainly looking at? For me, this hasn't really changed in terms of my goal. The weight obviously has been reflected with the new purchases, but I'm still trying to have the same general weighting. And a lot of my like current weight is close to the actual goals. So I'm pretty happy with the way that this is diversified right now. And something that I didn't really actually cover yet is with the annual crypto that I'm pulling in, if that continues to be the same rate and I actually make 640 from annual dividends, well, that actually puts me at $81.34 on average per month, which completes my goal of $75 per month earned from dividends. Now, that wasn't exactly my goal. What I really meant originally was from fiat. So I haven't 100% hit that goal. But in terms of the overall concept, I just wanted to be able to pay my cell phone bill with passive income, which is now possible. Mind you, I'm not actually taking out my crypto. I'm keeping it and taking some of the excess, and what I'm doing essentially now is what I'm doing with regular investing. So as I earn crypto, I'm taking it out and I'm saving a bit of it and putting a lot of it back into investing in stakeable and dividend paying cryptocurrencies to continue building this. And I take a certain amount out every month from my overall earnings and put it aside for alcohol and food, things that I can pay with easily with a card. So that way I can sort of offset those costs and then just put that into investing in dividends rather than actually withdrawing it and then potentially having to claim that on my taxes. So that's kind of my hack around that. Hopefully me explaining all these really great ways to get around things doesn't end up biting me in the ass and end up making sort of tipping off CRA. And I don't know if they can actually do anything about the things that I'm talking about. So, you'll have to make your own judgments there. Also, if you include the RealT income, which is the cryptocurrency token share of the rental property, then that's actually going to bump it up to $83.33 Canadian every month. So that is well above the goal, and I'm really, really happy to be able to report that. I still want to get this up to 75 by the end of the year, and I think that's more than possible. So now my overall goal is $125. Hopefully we can hit it. I think it's very, very possible. Most of this was achieved in the past 5 months because of how down the market has been. And if I can somehow finesse and continue doing this, then I have no doubt in my mind that we will get to 75 and 125. Anyways, let me know what you guys are investing in. What crypto dividend or stakeable stocks are you investing in? What are you investing in for real estate? What are you investing in for dividend paying stocks and ETFs? How are you diversified? I want to know everything. I'm sure other people are curious as well. Let us know in the comments below. And if you did watch to the very end, I really appreciate it. Make sure to comment #1ham. And as always, thanks for watching. Cheers. Thanks for sticking around. Since you did, please give this video a like. And if you'd like to see more, make sure to subscribe. You can also support me by donating to the addresses below. If you're using an Ethereum wallet, you can send to scottcbusiness.eth. If you're using another wallet like Coinami, Trust Wallet, Atomic Wallet, you can send to scottcbusiness.crypto. On both wallets, I accept Bitcoin, Ethereum, Litecoin, Bitcoin Cash, and Ripple. Anyways, thank you so much for watching. Don't forget to comment, like, and subscribe. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.